All right, welcome back everyone to another deep dive. You know how this works. We pick a listener question and really get into it. Today's all about chart patterns.
Uh-huh.
We've got a good one here. Someone wants to know, what actually causes a chart pattern to form, I guess is the right way to put it.
Yeah.
So we're going to be looking at this excerpt called What Causes a Chart Pattern. Should be pretty interesting.
Yeah, I think this is going to be a fun one.
So let's jump right in. So the big question right up front, what is it that causes a chart pattern?
Right.
What makes them, appear?
Well, the funny thing is this excerpt right off the bat kind of says, there's no single answer, like this is complicated.
Right. Okay. So no easy answers.
Yeah, no silver bullet, unfortunately. But that's what makes it so interesting to dig into.
Right. Yeah, exactly. Because then it's not like we can just say, oh, well, it's just this one thing.
Right.
Done. So what are some of the things that it does talk about?
Well, one of the big ones is the human element. Psychology, how people behave.
Oh, interesting.
It even mentions, a study that said something like over 60% of all the decisions made in trading are based on emotions.
Really?
Yeah.
Wow. Okay. So that's a lot. So how does that actually play out in the charts though?
Well, think about it. If everyone's super scared, that's when you see those big sell-offs, right?
Oh.
When a stock's price is dropping and people just panic and sell.
Right.
That creates a really distinct downward pattern.
Oh, I see. Yeah. Okay. So is it the same on the flip side then?
Yeah, totally. Think about greed driving those huge buying frenzies.
Right.
Everyone wants in on the action and bam, upward trend.
So we're basically seeing human emotion play out visually.
Exactly. It's the charts are kind of like a mirror to our collective, hopes and fears and all that.
Wow, that's actually kind of cool when you think about it that way.
Yeah, it is. But the excerpt goes on to talk about some other stuff too, like bigger market forces.
Okay. Like what?
The classic supply and demand.
Right, of course.
If there's tons of demand for a stock, the price is going to go up, probably leading to some kind of bullish pattern.
Right, makes sense.
But then if suddenly there's way more supply than demand, well, you see the opposite, a bearish pattern with the price dropping.
So we've got the human psychology thing and then these bigger kind of market mechanisms at play.
Yeah, and the excerpt actually digs into how these two things interact.
Okay, how so?
Well, it talks about this whole debate between technical and fundamental analysis. It's two different languages trying to explain the same thing.
Ooh, okay. Can you break that down a bit?
So technical analysts, they're all about those chart patterns. They think the patterns themselves can reveal predictable trends.
Almost like those trends are a self-fulfilling prophecy in a way.
Exactly. They believe a lot of it is driven by that collective market psychology we were talking about.
So they're looking at the charts, trying to read the minds of the masses.
Pretty much. But then you've got the fundamental analysts.
Right.
They're more like detectives. They're digging into a company's financials, their earnings, assets, all that stuff.
Like the nitty-gritty detail.
Exactly. They're trying to figure out a company's real intrinsic value.
Okay.
They believe those chart patterns should be reflecting changes in that underlying value, not just psychological trends.
So are they saying that the technical analysts are wrong then?
Not necessarily. It's more like they have different approaches and interpretations. That's where the debate comes in.
Right. Okay, I see. So who's right then?
Well, that's the million-dollar question, isn't it? The excerpt doesn't really give a definitive answer. There's no consensus among experts about which one is better or more accurate.
So we still don't really know definitively what causes chart patterns.
Right. But we've got some pretty good clues now.
We've learned about how human emotions can drive market movements, how supply and demand play a huge role, and we've got this whole debate between technical and fundamental analysis.
Yeah, it's really all connected in this intricate web.
It's pretty cool how much depth there is to this, right?
Oh, absolutely. It's not just about recognizing shapes on a graph. It's about understanding the forces behind those shapes, the things that make the market tick.
Yeah.
And knowing that can be super valuable for anyone who's trying to understand charts. It's not just about spotting patterns, but understanding what might be causing them.
Totally. So it's the next level of analysis.
Yeah,
almost.
exactly. And that brings up a really interesting question. So I want you to think about this. How might what you learned today about all of this, the psychology, the market forces, these different ways of looking at things, change how you interpret and use chart patterns going forward?
Yeah, that's something to definitely think about. Well, I think that's about all the time we have for this deep dive.
Yeah.
Thanks to everyone for listening in, and we'll see you next time.
See you later.
Bye.